All right, what is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about BBIG. Okay, Vinco Ventures is absolutely ripping in the market today, closed up 25%, right around here at this 336 level. Now, we're going to go over all of the key levels in today's video. You see, we broke this long-term trend line here, right? We consolidated here, flipped it, all right, and then we baselined, and we've just been going straight up since. Now, we're currently above the month-to-date anchored VWAP, the weekly anchored VWAP, and we have our year-to-date anchored VWAP here as well. There's a very important level we need to get above, and I'll explain why in today's video. Be sure to smash that like button and subscribe to the channel if you guys are new. Today's video is sponsored by Simply Wall Street. It's a really great platform for fundamental analysis. So if you guys aren't familiar or you're not a pro at fundamental analysis, they have their pros doing the fundamental analysis for you guys, breaking everything down very simply, and you get a 14-day free trial using the link in the description and up to 40% off for the first 100 people that join. Makes it very affordable, less than $200 for the entire year. And use that 14-day free trial to look up stocks like BBIG or maybe a different stock, right? Maybe one of your favorite stocks that you own or a stock that you want to own. And I'm telling you guys, just the free trial alone is going to be worth it. They have an awesome app and an awesome website. So definitely check that out using the link in the description. Now, today's video, of course, is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer, and we'll go ahead and get into today's video. Now, as I mentioned, all right, there's a very important level up here, which is going to be 389. And the reason that this level is so important is because this is our 61.8% retracement level, okay? The reason we use these, right, the 61.8, the 50%, and the 38.2, these are the three most common and well-respected Fibonacci retracement levels. And you use these to identify trend continuation versus trend reversals, right? Because nothing moves in a straight line down and nothing moves in a straight line up. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. So if we take our swing high over here, connected to our most recent swing low, you see we have this massive move to the downside, and all of this is healthy retracement territory to potentially continue the downtrend. So that's what we need to be cautious of. Now, what happens if we break through here, right? What happens if we break through there? Well, not only do you use the fibs to identify that trend continuation up or down, but you can also use them to spot reversals, right? So if you move up, retrace, and you start to consolidate and break through those retracement levels, you can spot a downside reversal. And the same thing goes for the upside, right? If you move down, retrace, consolidate, and break through the upside retracement levels, then that's how you can spot a potential upside reversal. So we've had this massive move down. We're retracing now, and if we could start to consolidate here a little bit and break through this $3.89 level, then the odds significantly increase that we get a 100% retracement back up here to our previous levels of around $5.50. Now, above that 389, we need to be cautious here of this year-to-date anchored VWAP. That's what that purple line is. This is where large institutions typically tend to sell and buy, right? So it could be turning into a buying point, right? If institutions think that this is gathering enough momentum to push higher. But you do need to be cautious of that, right? Now, 336 is our 50% retracement level. We rejected there today, and not a hard rejection, really just, closed right around that level, just below it at 333. So we're going to see what happens there. Below there, we have 283, and then these three right here are going to be our Fibonacci retracement levels of support. So we've had this massive move up. Everything down to here to $2 is going to be healthy retracement territory to potentially continue the uptrend and try to break through that 389 level, right? So 254, 227, and $2 are the real key levels right here. Now, what's pretty interesting here is our month-to-date anchored VWAP, our monthly anchored VWAP is curling up right now, right? And so is our weekly anchored VWAP. So momentum definitely short-term is in the favor of the bulls, but the macro trend is bearish right here. You can tell by the year-to-date anchored VWAP. But what I think is really interesting, if we do start to pull back, this is going to continue to head upwards and maybe even flatten out and get closer to around that 50% retracement level. So right now, the monthly anchored VWAP is already above $2, and it'll be interesting to see if it creeps up around that 227 level. Oftentimes this is where you see market makers buy, right? You see we get above the monthly anchored VWAP here, and once we're closing above it all of these days, look at where the buyers step in right here at the monthly anchored VWAP, right? Then we pull back again to the monthly anchored VWAP and we start going higher. Same thing here with the weekly anchored VWAP, right? We bounce off of it a couple times here. We open above the weekly anchored VWAP here, and we see that strong push to the upside. Now, this is known, and this does look to me like a frying pan bottom, which is this chart pattern that we have here. And you see you have this initial downtrend, right? And then you get this period of consolidation, and then you get a really big push to the upside. If this thing gaps up soon, right? And let's say it gaps up sometime soon, we could see a really, really massive run in BBIG. So you definitely want to keep this one on your radar, but you want to have some type of risk management, know where you're going to take your profit at, know where you're going to cut your losses at, because without doing that, then you're just trading blindly and gambling. And oftentimes, people win, okay, but more often than not, people lose when they don't have a defined plan. So define, what fits your risk profile, what fits your risk strategy. If you take a look at the RSI here, we are technically overbought on our daily time frame. And typically, you don't want to buy something when it's overbought. You want to be buying something when it's oversold. So those are the main things that I'm looking at right now on BBIG. Smash that like button, subscribe to the channel for more if you guys enjoyed this video, and feel free to always email me too at ZachlyTrades@gmail.com for a one-on-one coaching session. I do personal sessions every single week, and if you're interested, you can shoot me an email and we can work on setting up a time. Don't forget to check out today's sponsor, Simply Wall Street, using the link in the description. Really amazing platform. You'll get a 14-day free trial and up to 40% off for the first 100 people that join.